Fullerton here from Aliom Markets. Look, if Mr. Swan does jump on board and block this, is this the last resort for BHP? Do they have to now look at some capital management, look at a share buyback? Is there anything else on the shopping list you can see in the near future that they could spend their balance sheet on? What are your thoughts of this?
It seems to be a problem that a very large company taking over significant assets, there seems to be problems. We've seen it with other companies, NAB, with their attempts. We've seen this issue not just with mining companies. So I think, yeah, perhaps for a company obviously the size of BHP trying to take over major assets and become even a bigger player, I think there are some issues from the regulatory hurdles, and therefore they would have to look at a buyback. And look, the buyback would be good for shareholders. It'd be significantly earnings accretive at the 10 billion mark. They could buy back even more, of course, if they can go to, they're going to net cash within a 6-month time period or thereabouts, which means they'll have no debt on their books whatsoever in fairly short time frame, which is clearly time to look at things. If you can't pick up an acquisition, then a buyback becomes very desirable, and it looks like shareholders are considering that may be the case, and we've seen the price rally quite significantly.
Yeah. Right now.
Jack, Al here from Aliom Markets. Let's switch over to oil now. Obviously, this classic risk-on trade there. We're seeing excess liquidity coming back into the markets. Oil over 87 a barrel now, heading towards 100 barrel anytime soon?
I think the first objective for the bulls is $90. The Saudis kind of put that out there a week ago, and we're trying to see if we can get it there. I don't think that $100 is really out of the question for some of the bull side. I think it'll be obviously it'll be that much tougher to get to but a lot will depend on the currency right now, and a lot will depend on how our economy reacts to the stimulus. If we do start to recover here a little bit and our demand does start to go up, then yeah, I think $100 becomes pretty easy. I don't really see any changes going on in Asia. China's going to continue to consume a whole lot of petroleum and a whole lot of crude oil, but I think the question is, do we get an uptick here? And if we do, then yeah, I think $100 becomes easy.
Jack, Al again here from Aliom Markets. We talk about this global growth. We're talking about rain. Let's talk about fertiliser. We've seen obviously, BHP being in vogue there with their takeover target of potash. We've seen Orica over here reporting pretty bullish numbers there. Real focus on the agri side there. Global fertiliser outlooks are actually looking pretty bullish. Do you see, continue to see this trade growing as we go forward, based on this developing world demand for food?
Yes, I do. I don't really see that being an issue here. I think it's incumbent on any producer, even though the cost of fertilizer and the cost of all inputs are high, I think it's incumbent on every producer to try and produce to his maximum. Not only are the prices great, so you're going to want to produce to the maximum, but you kind of have to these days, because if you don't, the chances of loss are so high, land values are so high right now that you really got to do everything you can to ensure the possibility for a good crop. I think that implies that even marginal land, because of the demand that we're seeing, will get put back into use, and marginal land will just need that much more fertilizer. We certainly plan on using it here. I know the South Americans are going to be using just as much fertilizer as they can to make their crops just as good as possible as well. And it's more important down in South America, and especially in Brazil. Some of those soils are really not conducive, for example, to growing soybeans without significant use of fertilizers. So as their area continues to expand, I think that's another growth area as well. And we'll see what happens once we get into the Asians get hopefully a little bit better weather. I'm sure they're going to want to produce to the max, and that implies use of inputs, and that implies use of fertilizer.
So I want to get the final concluding thoughts from my guest host this hour, Al Fullerton, Senior Equities Broker at Aliom Financial. And Al, I guess as we work our way towards our own start of the session, just how are you judging the mood certainly amongst clients? I mean, what are continued questions that come back to you?
Look, I think obviously the concerns over QE2, that's out of the way now. We're seeing a short term that there's going to be liquidity in the markets here. I feel there's going to be a year-end rally. I think that it's a longer-term concern with the QE2 rather than the short-term immediate concern there. We're seeing Goldman Sachs, the support behind that, saying they see some, certainly in the short term it's going to be bullish for the markets there. We're in the midst of this commodity rally, so let's really focus on Wednesday, Thursday's feedback from China. That's going to be really implemental. I think that's going to give our market some direction. And I certainly think that towards year end, the bullish market run there is going to be really driven by this ongoing Chinese thematic and this weakening USD.
If Europe was, though, to flare up in a bigger way than this, because interestingly enough, the cost of Greek debt actually declined a little bit yesterday.
Yes.
So it's very sensitive, obviously, the bond market to any developments on the political front.
Yep.
We've seen that playing out. But if things were to escalate, could that actually be enough to damage? Just briefly, finally, this rally that you're talking is in the future.
Look, I think that if something did happen in Europe, it'll throw light onto the financial sector. I don't think it's going to have a huge implementations to the greater commodities sector. As Savannah mentioned before, that it would be perhaps a weakening USD, which actually have an onset to the Aussie dollar. But in terms of the European concerns, I can't see those having substantial effects on our markets. It's really going to be certainly the US, how those markets are on the back of this liquidity, and certainly China and our ongoing commodity relationships with them.
Al, it's been great value as always. We'll look forward to the next opportunity.
Carson,
Have a great
thank you very
session.
much.
Cheers. Al Fullerton there from Aliom Financial, just minutes away now from that